Good afternoon, traders. Let's take a look at what has been moving the markets today with updates on US consumer spending, oil prices, and gold. So starting with the US consumer spending. The July's numbers showed encouraging signs of resilience. The household spending rose 1.8% year-on-year and 0.6% month-on-month, bouncing back after a weak first half. And travel and leisure were strong drivers. The airline spending posted its biggest monthly jump since January last year. And higher income households continued to lead discretionary purchases. But lower income households also lifted their share to over 70%, with no signs of cutbacks or heavier credit card use. And for retail sales, we expect the control group to beat consensus at 0.6%, though part of that may be due to tariff-related prices increase. So next, moving to WTI crude oil. The oil prices extended their slide, with WTI briefly dipping below $62 for the first time in 2 months. The move came after a surprise jump in US crude inventories, which is up 3 million barrels versus expectations for a draw. And imports rose sharply, while demand indicators softened, with both gasoline and distillate consumption falling. And globally, OPEC remains upbeat on longer-term demand. But the IEA is warning of oversupply risk amid the high prices and economic uncertainty. In the near term, rising supply and signs of slowing consumption are keeping the pressure on prices. And traders are also eyeing on Friday's US-Russia peace summit in Alaska for potential geopolitical implications on energy flows. And last, gold. Gold remains one of the standout assets this year, up more than 25% and on track for a third consecutive year of double-digit gains. But the drivers have shifted. It is not just about real yields, the dollar, or inflation expectations anymore. Instead, the geopolitical tensions, trade protectionisms, and central banks buying, especially from emerging economies like China, are underpinning the prices. While steady US growth and high policy rates could pose headwinds, gold's role as a liquid long-term hedge remains intact. We maintain a slight overweight allocation given its ability to diversify risk and hold value under market pressure. So to wrap up, the US consumer spending is showing renewed strength. Oil is under pressure from bearish inventory data and demand concerns, and gold remains supported by geopolitical and central banks' demand. So that's all for today. Thanks for watching, and I will see you in the next update.